G'day expats and welcome to another episode of Expat Chat. Expat Chat episode number 48 today, joined by my mate, colleague and the guru that runs the Australian office, James Ridley. G'day, James.
G'day, Brett. And those who are tuning in for the first time, I'm also joined by Brett Evans, the Managing Director of Atlas Wealth for the EMEA region, which is Europe, Middle East and Africas. How you going, mate? How's the sandpit treating you? It's obviously heating up over there.
Mate, we were just talking to someone yesterday saying how in the last 2 days, the fact that we've got this long into June and it hasn't been blazing hot, we're loving it because the last 2 years, May has really kicked off with a bang. So taking every day as it comes, it's always inevitable. You know, summer comes along, it's hot, we've got air conditioning. People ask, what's the temperature like? And I say 22 and a half degrees. And they say, no, not in the office or in the car. So, but that's where I live. But mate, today we wanted to talk to the good folks out there about foreign exchange, currency exchange, goes one number of different ways, and just how to optimize your rates. Obviously, with the Australian dollar flipping and flopping, people are considering repatriating funds. So let's kick off this episode and let's get the jingle out of the way. So all information that we had the privilege of talking to you good folk today about should be taken as education and informational purposes only. Please do not construe this as personal advice and speak to a professional like Atlas Wealth Management.
Gosh, mate, smooth. Got it down pat, tell you what.
Yeah, I'm sort of flipping and flopping whether I do the joke ones, but today I felt like it was an easy one.
You've got that memorized now. That was smooth. That was clean. I mean, a good topic today. Something we're dealing with day in and day out with a lot of clients. I mean, transferring money overseas or transferring money back to Australia, depending on what way you're looking at it. Yep, currency, AUD, it's weak at the moment. You've got US dollar acting as a bit of that safe haven, which is pretty normal through these times. But I guess the common question we probably both get asked is, what's the best way to do it? What's the best way to send money back to Australia? And I guess there are a lot of different ways you can do so. There's a lot of platforms, and you sort of love hearing about a lot of the back and forth that you see in the Facebook groups, the LinkedIn groups, the WhatsApp groups. No, do it this way, use this link, or no, I spoke to this person, they could do it this way, all those sort of things. So it's a good topic that we should flesh out today.
To me, I think let's break it down and let's talk about the best way to maximize rates over a long period of time, and B, how to actually get those good rates on those days and those sort of things. So, whether you're buying shares, whether you're buying any sort of assets, whether you're transferring cash, dollar cost averaging is the name of the game. Do you want to run through the folks what dollar cost averaging is and how that ties into the currency side?
Yeah, well, firstly, we can't control what the currency is going to be, what the exchange rate is going to be. That's very clear. So dollar cost averaging feeds into that, where rather than, say, grabbing all your savings in a foreign currency and sending it over in one hit, you're breaking that up, and you might break that up across a few transfers over a period of time. I know a lot of my clients, they're saving regularly each month, and as part of a form of dollar cost averaging, they'll send back each month a portion of that foreign currency, US dollars, whatever it might be, Singapore dollars, and convert it to AUD. That is a form of dollar cost averaging. You're spreading out the time in which you're converting that currency at different rates, and it helps smooth out over that time period the FX rate that you're actually achieving, rather than hypothetically bolstering up all your overseas savings over, say, 3, 4, 5, 10 years, and then going, all right, I'm now going to transfer it back and go, shit, the US dollar, it's now, only worth $1.10 AUD compared to $1.40. 5 years ago, I've just lost out on, 30 cents on the dollar there in terms of a currency gain. So you can control dollar cost averaging. You cannot control the FX rate. So think about it from a more logical perspective rather than an emotional perspective, thinking you can predict the future and what the currency might be.
I think you hit the nail on the head. It's the taking the emotion out of the equation. When you're disciplined, and if the 15th is the payday and on the 17th of every month, you just make that transfer regardless what the exchange rate is. You'll get some months that are bad, but you'll also get some months that are good. A couple of months ago, the dollar was at 69. Now it's at 72. You might have thought at 69, it's got to go to 65, I'm not going to transfer. If you did, today you look like a genius. You've just made 3 cents on your transfer. So I think it's as Australians, we always like to think we know better and like have a bit of a punt. Yeah, it's like, oh yeah, no, she's go down a bit further and they'll have 1,000 reasons why, and we call that confirmation bias, which is you find information that suits your argument. Just don't even think about it. Just make that transfer. We see time and time again people who accumulate wealth in their primary country of residence. Murphy's Law loves to play its game. It loves to come along at the worst possible time. And
well, hang on.
Just when you're about to...
Murphy's Law, what can go wrong?
Will go wrong. That's exactly right. So, and I've seen this play out time and time again. Best one was a couple of clients coming out of the UK back in 2015. They virtually sold everything, were getting ready to move. All their wealth was in sterling pound. And then this little thing called Brexit vote happened, and the pound fell 15% in the space of about 45 seconds. So they had a big choice to make: either take the financial haircut or, wait on and keep working. And luckily they were able to do that. So you don't want your repatriation to be governed by a currency. The biggest drama should be booking the ticket and getting home. And that's the big thing we always talk about is when you take all these things out of the equation and you take control, you can't control currencies. You can't control what happens in the world's economy, but you can control the aggregation of those assets. And like we always say, you want to accumulate wealth in the country and intend to return to or retire to, because currency risk is one of the biggest risks for expats.
Yeah, absolutely. And I mean, you're right. Obviously, spreading things out. I mean, I remember a similar situation when the Singapore dollar was trading at $1.20 AUD, and a client of mine thought it was going to go higher. Looking at all the data and all the information, I was like, shouldn't even be that high right now. I was like, you're better off breaking it up, tranching it back over the next 3 months, rather than back-end loading your transfers in 6 months when you're actually going to return. And lucky they listened to that advice. They broke it up, and I think their average FX rate that they achieved over that 6 month period was about $1.16. And then 6 months at the time which they would have returned, I think that Singaporean dollar just fell very quickly against AUD. I think it dropped down to about $1.08, then $1.05, just kept going. And they were lucky that they ended up breaking it up, dollar cost averaging, spreading it out. Because they got a really good, I suppose, return on their Singapore dollars from a currency perspective, rather than, again, back-end loading your assets in terms of the currency transfer. Unfortunately, that's what still does happen. A lot of expats, they back-end load their currency transfers when they're actually leaving it as an expat. And I always put it down to whether there is some sort of myth out there in terms of, can't send cash back to Australia. You can, but yes, giving it an active purpose and using it appropriately, that is important. But I guess still coming across a lot of expats that have the majority of their savings overseas, even though they're still returning back to Australia in short term.
Matt, I can validate it. I speak to people every week who think you can't send money back to Australia every week. So it is a myth. There's nothing there, as you say, as long as there's an active purpose with that transfer, whether you're investing, paying school fees, buying something, whatever it is, as long as it's not a cash transfer of money sitting in the bank, then there's no problems at all with that. And also, the narrative or the description on that transfer as well, make sure it's not saying income or salary or loan or employment.
That myth around the $10,000 rule. That's still myth around in the Facebook groups. I can't believe it.
To me, I reckon it's once every 6 months I meet someone who's doing transfers at $9,999.99, thinking that they're going to get fun. No one's going to notice it. And I tell them, you have a bigger target on you than someone who's transferring $10 million. And they go, what do you mean? It's like, well, who would transfer such an obtuse amount of money consistently? It is such a random amount.
Austrac picks up every transaction. So
from $1 to 100 million. Exactly.
You're not being sneaky. Everything is checked. But yes, no issues there. I think there's also probably a concern around best ways to transfer money. And also just the unknown, is that going to be taxed? It's like, well, no, if you've locked up your non-residency and you're up to date with your tax returns, your situation back in Australia maps that of a non-resident, not really an issue. Active purpose, that's important. Can't just sort of build up hundreds of thousands of dollars in this cash account, not do too much with it for years. That probably looks a bit suspicious from the ATO. Need to give it a purpose at some point. But I think a lot of new inquiries and expats that I've spoken to in the years, it's always like, okay, well, what's the best way to do it? Are they going bank to bank? Are they using some sort of platform to do so? And, it's also there's this talk around transaction fees, better rates, hidden fees. It's quite funny what gets, again, spoken around a lot of the Facebook groups, even the WhatsApp groups as well, around transfer fees. And no, this platform's better. They don't charge a fee. Well, we might debunk that myth right now.
Look, I think let's identify the different ways, and also to there's subsets of those ways as well. So I mean, the simplest way, the easiest way, the lazy way is bank to bank. And I'm sure bank executive bonuses are driven on this, because some of the margins we see are pretty horrific. To explain folks out there, there's the spot rate, which is what you see in the papers and online, what the Australian dollar is doing against all the different currencies. No one ever gets that. That's just it's like a market rate. Now, from that rate, you have margins on top of that. So let's keep it simple. Let's say the Australian dollar is trading at 70 cents the US dollar. So at the extreme end, you'll have a CBA or a NAB or one of those major banks, and they may offer you 72 cents, 73 cents to the US dollar. That means they're making 2 cents on that 70 cents. That's their margin.
That's right. That's
so they may say, hey guys, we're not going to charge you a transaction fee, and you go, fantastic. And people generally assume that they're getting that 70-cent rate and not paying any transaction fees, going, this is brilliant. In actual fact, you're getting taken for a ride, because you're paying 2 cents, 3 cents on top of the rate that you should be getting if you work with another provider. Now, exception is to some banks. Some banks do have Premier,
that's common in the Middle East, actually. Premier,
So, and they will get better rates. So you just need to, if you are looking at using a bank, get xe.com or something up on the screen. Look at what the spot rate is and look what the bank is offering to charge.
That's right. Make a market comparison.
Exactly. If it's more than, say, 50 to 60 to 70 basis points away, so if it's more than 70.5, 70.6, 70.7 on that transfer, then they're having a lender view, and every time you do that transaction, they'll have a little party in the background because they're making a lot of money off you. So just be wary. Just because they're not charging a fee doesn't mean they're not making a lot of money off you. Look at that transaction fee. There's always that convenience side. If you are transferring small amounts, look, you probably could go through a currency broker. You might save yourself $20. It might just be easier just to go online and go bang, done. And look, we get that. It's when you're transferring reasonable amounts, 5, 10, 15, 20, 100 grand, $1 million, that's when you really need to start to look into it. Second, folks, we've got what's called the currency brokers or the exchange houses. And people will be aware of OFX, Wise, not called TransferWise anymore. There's another one called, starts with letter C, Currency Fair. They're sort of the main popular ones. And every day, a day doesn't go past on these groups, where Facebook groups and WhatsApp groups, people saying, where's the best place, or how do we transfer our money? And people go, oh, Wise does this, and Currency Fair does this, and OFX does this. What they don't realize is each one of those providers has their niche market set. So people will say, oh, I looked at OFX, the rates are too high, Wise was a better rate. And the reason for that is if you're transferring small amounts, $500, $1,000, $2,000, that's where Wise and Currency Fair play the most. They will, work on very low margins and go for scale, massive economies of scale. Where it gets interesting is when they start to get up to the 5 and 10s, that's when the Currency Fairs and the TransferWise start to drop off. And then the OFXs start to become more competitive. When you get above 10, 20, 50, 100, there is no comparison. The smaller margin players aren't really competitive, and you need to talk to the larger players like at OFX or something, in a similar ilk, because that's when you should be paying maybe 30 or 40 basis points. So using that example before, dollar sitting at 70, should be 70.3 or around that sort of area there.
It should. It's also depending. I mean, if you're doing larger transfers, a lot of my clients, they love having an account manager that they can call up and go, hey, listen, I'm in the US. I'm just about to send back 50,000 US to AUD. Can you help me set this conversion up? And I know through the account managers at OFX, they'll walk them through that transaction. They'll help them set it up. They'll send them text messages and emails throughout the process of the funds. So yeah, the larger transfers, I would say, anything over sort of 5,000. I know OFX in the past has wind out, and this isn't just a puff piece on OFX. Wise and Currency Fair, yeah, they have their parts in the market, as we just discussed, where they fit in, where they tie in. But even if they're promoting, oh, we don't charge fees, well, they do. It's just a case where their little fees are built into the actual FX rate that they're offering you. And again, the smaller converters, well, they're based on huge amounts of volume. Your wires and those sort of things, they're based on people doing little amounts, every day. And, in the long run, that's how they're making their revenue piece. Whereas, yeah, OFX, they can give you a better rate. They might charge you a little fee. But when you stack it up against the two for transferring back 20 or 30,000, did the conversion, OFX might usually just win out, actually. So
Yep.
That's what we've seen in the past. Well, that's what my experience has been, especially with the US dollar and SGD as well.
Yeah, look, it's there's a whole science behind what they do. They've got to make a buck. They've got to do it the most compliant way, but also the most profitable way. So everyone has their unique skill set. Nike doesn't make high-heeled shoes. So, you need to work with whoever is most beneficial for the type of transfer you're looking to make, because certainly, you can actually set up these accounts for free. That's the other thing as well. I tell people, maybe set up 3 accounts. Wise, Currency Fair, and OFX.
That's right.
And
Why
then
not?
test the rates. The rates once you lock in. But I do agree. And this is us not sell. We don't own OFX, and nor do we have them in our portfolios. The reason we like them is A, they're Australian regulated, B, they're an Australian company, they're on the ASX, and C, most importantly, there's human beings behind the transaction. The amount of people who've pulled their hair out trying to talk to a bot when they've lost $2,000 or $5,000 and they don't know where it's gone, and they've had to jump through so many hoops to talk to a human being, as opposed to once you set up an account, you actually get a phone number and you can call this guy or this girl whatever you want. And the other good thing too is if you are transferring a reasonable amount of money, let's call it 100 grand, 200 grand, $1 million, you can actually get them to sharpen their rate. So you might see X on their screen quoting a price. Call these people up and say, look, I can get a little bit better. Can you sharpen your rates? And they will do it.
Exactly. Yeah, I know. They're willing to work with you as their customer. Whereas, Wise, yes, had plenty of clients tell me about the sort of customer service, because it is all auto and I suppose robotic to a degree. So you can't, there's a chatbot, but you're not getting too much from the chatbot either. So it just depends. It depends what maps with your situation, what you're trying to achieve, and I suppose the type of transactions that you're doing. I know in some countries it's very hard to actually, there's a few providers out there, but if you're in a country which has what we would consider an exotic currency, there are
Let's call
a
it
lot
Saudi Riyals. There you go.
Yeah. I didn't want to name drop.
Yeah.
SARS. So because it's an exotic currency, you try and convert reals to US dollar. Well, they're not really in the market for reals. So they can't really offer you a great rate or a rate at all, because they're just not accepting that currency.
There is a way around that though. And I recently discovered this with a couple of clients, and we've been testing it. It works really well. So most folks in the Middle East will have a dirham or reals account and a US dollar account. It's just when you open a bank account, that's what comes with it. And because the reals and the dirham are pegged to the US dollar, so you can move money back and forth. And it's the same exchange rate. The bank will make a tiny margin on it, but nothing too horrendous. The way the currency brokers work is they all have bank accounts around the world in different currencies. So let's use OFX as an example. If I want to transfer money from Arabic dirhams back to Australia, then I will transfer dirhams from my bank account here in Dubai to the dirham bank account that OFX holds with Barclays in London. And then they'll transfer that from dirhams into Australian dollars and send it to Oz. Now, the problem you've got is reals. They don't have a Saudi real account in London, but they do have a US dollar account there. So if you bank with SAB, which is probably the most popular bank in Saudi that most people bank with, you can transfer reals to US dollars internally, and then you send US dollars to the US dollar account in London, and then bang, back to Australia. So there's always ways around it. You just need to be, a
bit savvy. Well, I mean, it's annoying that some countries, they've got those restrictions on sending money in different places. I know a long time ago, had a client that held a lot of US dollars, and this is just a side piece of story, nothing to read into, ladies and gentlemen. And they didn't have an opportunity, and the country they were in, they had US dollars, but they couldn't convert these US dollars to AUD or anything like that because of where they were based. So to get around it, they had to set up a CBA foreign currency account to receive the US dollars. And then because it was a large amount, I've told them, I was like, no, you can't convert using the FCA account with CBA to AUD because you're going to pay a stupid
massive
spread.
Yeah.
Oh, yeah, absolutely smoked. And so our next pathway after this was then opening an OFX account, transferring the US dollar into OFX, then convert to AUD to transfer to a CBA transaction account. It was an interesting process, to be honest, to go through. But that was just a side story about how some countries, they are difficult to convert currency to get it out. Usually you have to keep it in that currency and just send it over. So yeah, obviously always doing your research on that and trying to navigate that space can be quite difficult. That was probably an extreme example.
Yeah, no, I think we've, highlighted the points. Do your homework. To me, the big one is, these things do count. Sometimes we've saved people 1, 2, 5, sometimes $10,000 in getting them to use another provider as opposed to the easiest provider. It's money out of your pocket. So these little things do count at the end of the day, especially if you've sold a property overseas and moving a reasonable amount of money back to Australia. You need to do your homework. It's probably take you an extra half an hour. But if I said to you, James, I want you to do about a half an hour's worth of homework, but I'm going to give you $10,000 as a reward for it, you do it. And that's what people need to realize.
Yeah, absolutely. Couldn't agree more, mate. It's obviously, it's one of those topics which a lot of expats wrestle with, best ways to do so. Am I getting in trouble by sending it back to Australia? Answer is no. So it's something where if there was a platform that ruled them all, was able to connect to all countries, to all currencies, God, they'd have the monopoly forever, wouldn't they?
They would. So, man, I think the key takeaways from today's episode, number one, don't try and guess the market, dollar cost average. Number two, don't use the banks unless you're on some sort of premium package and you get some really good sharp rates. Number three, investigate. Set up accounts with Currency Fair and OFX and Wise. That doesn't cost any money to do it. Then you can shop around and do it. And last of all, do what works for you. Some people like set and forget. Some people like to get really into the nitty gritty of what's going on. So, to me, the biggest thing we're talking about right now is just take ownership. Don't do it on autopilot because at the end of the day, it won't go there. So, mate, I think we'll leave it for there. We do have some Q&A that people have sent in. So thank you very much, guys and girls, for sending your questions. Let's cover those on the next session. And for those new to the episode, if you like this, would love it if you could just leave us a review, bit of a thumbs up, depending on what platform you're looking at. And we'll put down below the link to the Q&A section as well. So please, by all means, send the questions through. We love getting them. We love answering them. So don't be a stranger.
Yep. Sounds good, mate. Thanks for your time.
Pleasure, mate. See you on the next episode.
Thanks, guys. See ya. Bye.
Thanks, mate.